Welcome to episode 38 of the Confessions podcast. I am Chris Sweeney, otherwise known as the Alchemist in these parts. I am your co-host, and riding alongside me is Mr. Hugh Hendry in St. Bart's. How are you, Hugh?
I'm okay. Bit rough today, but I'm okay.
Bit rough. Well, before we start, I'd just like to say, address the elephant in the room. Why am I wearing a suit, a shirt, and a tie? Look at me. Look at this, people. Well, the reason why I'm wearing it is because last week we delivered gold, and I did not see enough of a movement on YouTube. I did not see enough views. So I thought there's a lot of Muppets out there doing a lot of these hedge fund macro podcasts that seem to get huge views, and the tip is wear a suit and stand behind a desk. So I thought, well, I'll do it. I'll take the hit for the team. I'll be the Muppet in the suit. If that's going to put the views up, people, if you're going to take us more seriously because one of us is wearing a knotted tie around their neck, I'll be that person.
Chris, you are pure gold. Pure gold.
I will take one for the team. I will take one for the team.
You look like a hedge fund manager. Have you just made $1 billion?
Don't think so. No, don't think so.
Sorry.
If I did, would I be here? Would I be here?
Well, I'm here.
Yeah, I know, but you've done the hedge fund thing. If I had just made $1 billion, would I be right here, right now? I don't know. Maybe I would be.
Chris, if you had just made $1 billion, I suspect your year-to-date performance for your clients would be minus 40. Ouch.
Oh, he's right in there. He's right in there. But anyway, tell us about you being rough. I saw on Twitter that there was a party in your own home last night, and you were cordially invited.
Yeah, today I think I'm taking a blue pill. I'm not doing this for show. I feel really. Hold on.
Was it so? It was a big one then. It was tequila and all sorts. I'm assuming.
Yeah, because amigos. So.
Brilliant. Well, someone who's getting a lot of noise right now is our old friend Chase Coleman, who we talk about in this podcast quite a lot for a good reason. Now, in 2020, we had a look up, and he made between $2 billion and $3 billion. So let's not get the violins out too much for the young lad. But the thing is that his fund is doing so badly the start of this year that, according to calculations, and I trust these calculations, he's going to have to make 79% just to get back to his high watermark. And as someone tweeted, that's the bitch about losses. Lose 44% and it's 79 back to flat. The cavalry isn't coming this time either. So what do you make of that then, huh? Do you think Chase will chuck it in, or do you think he will strive to make that 79 back?
Chris doesn't even know my name, so I'm just like collapsing here. 50. Down 44%, times 1.76. Yeah, he has to make that. Well, I've got a t-shirt on, making an effort. I'm sitting here in my box with all the builders looking at me.
Ogling you, voyeurs.
Ogling. In fact, let me switch this fan over. Chase down 44. We discussed the volatility machine, which has turned smart guys and girls into billionaires. And this is the other side of it. It's a kind of heads I win, tails I win. You don't win. I remain fascinated by why the clients permit that. Like for me, I'd have a 3-year lock-in. Like whatever gains you make in the first year, you can only redeem the kind of the net figure after 3 years. So like if you do go up, I don't know, 40, 50%, and then you come down 40, 50% on the other side, it can't be heads I win, tails I win. You lose. That's a model which at some point just has to be knocked on the head. No offense to Chase,
But why hasn't some enterprising hedge fund manager done that?
No, but you've got the incentive structure wrong, Chris. The clients blindly adhere to a very generous rule. Why would you offer anything else? That would be stupid. That's the kind of thing actually, it's the kind of stupid thing that I did.
I'm saying it, no, but I'm saying if you did something differently and you said to the clients, right, you know what, I'm going to do this 3-year thing, surely people would go, well, I'm going to go with that because, you know, I can sort of, you know, this guy's obviously back himself or woman's back himself in the long term. It's going to be better for me. We're not going to have these big, you know, losses. And if we do, they're going to take the pain. So I'm going to be insulated from that. Surely, as an investor, it's a better deal for you. It's more appealing.
Woo! I've changed into the blue shirt. I took the blue pill, and now I have the blue shirt.
But no tie. But no tie. I notice you've still not got the tie on. Maybe next week we'll see you in the shirt and tie.
The Alchemist is just unrecognizable. But the reason no up and coming hedge fund master of the universe is desperate to take on your wise counsel is because it's a game of smoke and mirrors. You know, this is all about how you promote yourself. You promote yourself by saying, I am the best. I am the best hedge fund manager you have ever met. I am the future. I am a gusher. I am just going to be spraying money at you for the next 20 years. Yeah. And I have to charge you 2.20, but such is my talent and my hunger. This is my moment. I'm giving it away at 2.20. In fact, the longer I think about it, I think I might raise it to 30, 3.30, right? That's the kind of language people want to hear. It's, believe me, I spent my career shading the kind of pitfalls, kind of trying to give them transparency and insight into, I don't get it all right. This is just a Looney Tune business. I'm guessing on things which have yet to happen. And they're like, no. Shh. Just, again, we're here because you're like really amazing. You're brilliant. You know, this is all about myths. It's myth making. And, you know, bull markets create reputations. Bear markets take them away. And we seem to be on the cusp there. We'll come to it. But I think here, now, 5th of May or 6th of May or whenever you're watching this, I have never known a point where I feel like risk assets have ever been more vulnerable. I mean, I did go through, like 2007, we made at the money highs. But, you know, it had been befuddling me for a long time. We had the Fed meetings. We're going to discuss all these things. I don't want to steal thunder, but, you know, I'm looking at my very rudimentary, I'm sorry, live reporter. I'm looking at my screen. So I don't spend my day looking at stock price screens, but this is the day after the Powell pivot, but, you know, 50 basis points, you know, purge the rottenness from the system. And because some bloke from CNBC asked the chairman of the Federal Reserve, like the most blind person asking the senior member of the blind tribe, are you going to raise rates by 75? He's like, no, 50, but 75, no. Boom! Stock prices went to the moon. I did I did a Spaces thing with Ash Bennington on Twitter. Ash from Real Vision, I think is out there. I think it was pretty good, but we were just, you know, it was all like, hey, the stock market ended up 3.1%. Stocks are like, you know, we're back, people. And it's like, yeah, but why? You know, nothing revealed itself. Nothing apart from like they are blind. But stocks were up 3%. But woo! They ain't up 3% today. We'll see where they close. We'll see if they can harangue the close. But as I look at it, they have taken out, they have taken stocks. They have taken all of you morons that don't see the clear and present danger in risk markets. They've taken you to the woodshed, and they've gone boom, 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 boom. Chris, let's go.
Well, it is the 5th of May. I just want to say to all our Mexican people out there, happy Cinco de Mayo. Yeah, let's talk about it. Interest rates have gone up to their highest increase in 22 years by the Fed. The Bank of England has followed. And I'm also reading that India is also picking up interest rates. It's happening all over the place. Hugh, what will hedge funds be doing in response to this? And what would you do if you were a central banker?
Aha, what would the asset capitalists do? Do you think they're ready for me to be in charge of the bank?
I think so. I think in like places like Washington and London, it's just a case of they're just finding a wee office for you in a desk. It's just a matter of time. Or they're just finding the right office, the right desk for you, put you in a throne, anoint you, and off you go.
I think they might insist that I don't drink lots of tequila on the what is it called? The Cinco de
Mayo. Cinco de Mayo.
Cinco de Mayo.
The 5th of May, if my Spanish is right. If my I don't know, to all my muchachos out there, I don't know if my Spanish is right, but I'll do my best. And mucho gusto to you all. Yes.
Chris, you keep it up. I'm going to give you a job cleaning Blanc Blue. Let me. You said something confusing. The Bank of England and others slavishly have followed the American Central Bank, and the magnitude of the rate rise, it was 50 basis points, and therefore that would register it as like the biggest rate increase in a long time. I think since 20, well, I don't know, like for a long time. I
think 22 years. I think it's the highest raise in 22 years. Yeah.
What happened 22 years ago, Chris? Let me tell you, the Fed was raising interest rates, and the Nasdaq was like 5,000 and change, and then the Nasdaq started to go, oh, shit, they're raising rates, and the economy is going into the slammer. And the Fed Chairman Greenspan's like, I think keep whacking, more interest rates, more. I think the final rate. So the stocks peaked mid-March 2000. The last Federal Reserve hike was May of that year. What happened, Chris? Stocks lost 80%. Well, Nasdaq had an 80% correction. I think Amazon went from $115 to $5. Like, this is what happens when your guardians of the monetary temple, when they're blind, they can wreak havoc, and that's the danger of where we are today. Let me try and expound upon why I think it's crazy, and let me say again, there's a lot of I don't know the right terms. Liberal. There's a lot of kind of more social. No, not social. I don't want to say social.
Progressive.
There's a lot
progressive.
Progressive. I'm thinking like the Guardian newspaper. People who are who don't.
Yeah, that's what I was going to say.
Yeah,
there's a lot. I'm reading a lot of stuff. I'm not coming with Hugh's knowledge, of course, but I'm reading a lot of stuff, and it's almost been presented in a way that these interest rates have to happen. It's good for us, or it's the right thing to do, and we're just conditioned to expect it. And no one's really pushing back and saying, well, what if we didn't, or why are we doing that, or should we do it, or maybe we shouldn't do it. It's just like expected to happen. And even there was a bank in the UK that actually released notices to its customers on Tuesday saying the interest rates have been raised. Here you go. And then they had to recall it because interest rates hadn't officially been raised, basically showing that the whole system is geared towards interest rates happening and we've all just to go along with it. But there's a dissenting voice, and that dissenting voice is coming from a bunker.
Also, there was a moment when there was a glimpse of a better future with the Bank of England when they had Professor Danny Blanchflower. You can follow him on Twitter.
He's a prodigious writer. I've seen his stuff. Yeah.
He is first class, absolutely. Brilliant mind. He's retired. Otherwise, I'd reach out to him. He's too busy fishing and looking after his grandchildren, enjoying life. But he's been spot on this. He's like, honestly, they use silly models, and the repeated message from the bunker is we're in a depression. Like the ordinary folk out there, the real folk, they know it. Right? The people in St. Bart's, the people with too much money, like, what, do they know it? Or do they care? Do they know it? No, they don't. Does the Fed know it? No, it doesn't. And again, to repeat ad nauseam, the 30-year compound growth rate in US GDP was about 2.7% up until 2008. And ever since then, we have never got anywhere close to that. I think we've compounded just sub 2%. I want to say 1.7. So we had a curve of, like a linear line, if you will, a trend of prosperity, and something happened, and it's leveled off. And as it levels off, the distribution of wealth becomes more and more uneven. Now, it is just a crime. Sadly, it's a crime which has been repeated down through the annals of time, that central banks, they raise interest rates in depressions. They did this in the 1930s, the late 1930s. I want to say 1937. They did it in 2013, where this notion of a temper tantrum, temper tantrum, when the Fed said, you know what, I think things are getting, we want things to get better, right? We want them to rein back their financial mushroom experiments, with quantitative easing and rates, because that would signify that we were no longer in a depression. But let's wait until we get out of a depression. But anyway, they went too early. I was going to say something rude. They went too early in 2013, and that caused the private market, which allocates capital, to panic and to withdraw capital. And so we had economic weakness. And again, remember, that happened when adult unemployment was 7.5%. They were taking away the punch bowl with unemployment at 7.5%. That was a folly. Fast forward into 2015, and Janet Yellen, who's now the Treasury Secretary in America, she began a rate hiking cycle. To her credit, she was profoundly cautious. She seemed to have a kind of a good understanding of the labor market. And yes, we have these headline figures of very low unemployment levels, but then there's a push against that, which is people withdrawing their participation in the labor market. And so it's kind of murky. But she was modest, so she was 25 basis points. But that all changed with the advent of Chairman Jay Powell, and we call it the Powell pivot. And he just he's been reading the cartoon books of history, and there was this really brave, radical guy called Paul Volcker, and he became the chairman of the Federal Reserve, actually under Carter, but he was reappointed by President Reagan, and he's the one that went boom. He pushed interest rates up in a recession, which goes against the Hippocratic oath of I swear not to do harm. But it was a quid pro quo, because there was another problem, which was inflation, and he succeeded with that. But comparisons today with Volcker are just catastrophically inappropriate, because back then the debt, all agents in the economy, from the public sector, the government, to the household sector, to the corporations, for 40 years they had deleveraged. And so there was the quantum of debt versus the size of the economy was only 1.5x. Today, 40 years later, it's 4.5x. And so if the economy is the dog, the credit markets are very much, and the debt markets are very much the tail. And it's the tail that wags the dog.
Yeah.
In the sense that, so I put a posting, and we'll bring up the chart now, which was, it's just it's a dumb chart, but it shows you the ETF price is called, the ticker symbol is TLT, and it's essentially the price, the composite price of what's called the long bond. So on the run treasuries from 7+ years of maturity. We call it the 10. It's a great proxy for the price of 10-year US government securities. And in the summer of 2021, it peaked at 180. 180.
180.
Yeah. And ever since, it's been falling. And today, or yesterday's close, it was trading around 118. Okay, so that's a 10-year treasuries have been a very, very poor investment over the last 18 months. And remember, the smart guys are usually leveraged them. So the returns they're reporting, if they've held on to investors, are really, really poor. But my point is, so when the TLT drops from 180 to 120, interest rates have gone up. Interest rates have gone up from 0.5 to 3%. That's before the Fed's announcement, right? And what you can see is as that's happening, so as the private providers of credit turn the screw. The Fed's saying, hey, look, we're going to raise rates. And the market does it immediately, or it does it like in a step function into the Federal Reserve meeting. And what you find is it takes kind of 8 months as you kind of stop pouring. The analogy they make is the punch bowl, like take away the punch bowl from the party, right? And so you're like taking away the punch. But everyone's like still got a glass and they're dancing, the music's good, which is to say it looks as if it took about 8 months to affect behavior. And that kind of rhymes. And again, poor old Kathy, I don't mean, it's just like there's just so many believers in the gospel of Kathy. I mean, she might as well be a jihadist because they're all wearing suicide vests. It's called the Ark. They've signed a covenant, and they've been promised virgins in another world. Sorry for everyone involved. It's a tragedy unfolding. But it took, so the bonds and the tightening in the economy was going up. It took 8 months, and then the Ark price from. So am I getting my times? And my times are right. So I should be saying the TLT peaked in 2020, not 2021. And the Ark price peaked around about February of 21. So 8 months from the summer of 2020. Yeah. And it's been devastating. So like Kathy's fund is very much, it's speculative, but it could well be a worthwhile endeavor because she's trying to identify the stocks, the businesses, the entrepreneurs that could have a profound impact positively on our life, and in doing so would make a lot of money. That's the ethos of the covenant, if you will. But that kind of needs really soft, really easy money. And when you start taking that away, the Canadian goes boom. And that's what's happened. She's dropped like 65. I think she's dropped 70%. So the big story is the Fed and the Bank of England raised rates. Big deal, right? We raised rates in the last 18 months, and the evidence of that is not only in the falling ARK price, but of course, first quarter US GDP actually fell. So, and again, this brings up this Volcker thing. We're tough guys. This is the pivot. Watch out with the pivot. And that's why I'm saying I fear equities are profoundly vulnerable. I fear that prices could retrace back to where they were before the COVID. So I would look back at where the S&P was trading January, February of 2020. And if memory serves me right, that would be 3,400. And that's kind of like 20% away from where we are. So the Fed, I think, is making an error. Other central banks have no choice but to follow it. If you don't, as the Bank of Japan is demonstrating, your currency just really, really softens. So
you're almost one of those, continuing with your suicide analogy, you're almost one of those, the sort of people strapped into one of those, Jeeps. They've got to like ram into a building, but the kill switch is like, as soon as they take their hand off the steering wheel, the thing blows up. Like they've no choice but to drive in and blow up. Really, at that point, like you're saying, the central banks or the Fed's basically got them tied in with a finger on a kill switch. As soon as they let go, boom.
Yeah. So the riposte to all of that, which is relevant, is this tail wagging the dog, and at some point, you will see more and sharp and painful price corrections, which will then wake the Federal Reserve from its slumber. Now, I say slumber. Central banks are not asleep. Actually, there's another narrative that's going on behind the surface, behind the curtains. Behind the curtains, who's behind the curtain? The politicians are behind the curtain. In America, the Democrats are behind the curtains. They're like, Jay, sort it out. We've got midterms. And after midterms, we got another presidential race. And this inflation thing is like, we're getting it up the ass. Like, we're not going to get reelected, right? We appointed you, like, do something about it,
Yeah, step up.
they have no courage, right? They have no courage to resist that. So criticism is cheap. Okay, what would I do? I would take them on. I'd be like, fire me. We're in a depression. I ain't raising rates. Like, let me talk you through the last 12 years and let me show you every incident where we tried this, right? Doesn't work. And more than that, actually, I'm becoming culpable. We discussed this last week. I actually feel that my misadventures in credit tightening may actually be one of the most prominent explanations for why commodity prices are very high today. And actually, I fear that if I pursue the Fed's present path, what the legacy of that error is going to be prolonged elevation of commodity prices. So actually, everyone, I'm sorry, guys. I've been lying to you. I've been telling you that I've been printing money. It was a fib, right? I've not been printing money, right? And because I keep being like really hawkish, and at the first instance, I'm like, boom, and I'm raising rates. Something's happened, right? Well, and again, so let's do something's happened because Chris, last time round, I asked you for the cost of of buying bread. Going to the supermarket and buying you bread in 2010 have cost you.
For an 800-gram bread, a white loaf, unwrapped, in 2010, you would be looking at roughly about 110 pence, so £1.10 in the UK.
Thank you. And 3 years later?
3 years later, so that'd be 2013, you'd be looking at approximately 135 pence, so £1.35, £1.40. So it's gone up.
Gone up a lot. That's what, 30%. Where is it today?
Today, last figures are showing it is at £1.28.
So it's down since 2013.
Yeah.
And actually, since 2010, the compound growth rate has been nothing. It confirms the inflation statistics, right? So, because everyone's telling you the inflation statistics are made up, right? It's hedonic. It's a hedonic narrative created by people who wish to persuade you otherwise. Price of bread is kind of unchanged, but it's the journey. So it went up the best part of 40% in the 3 years, 2010 to 2013. Because the Fed went, we're printing money. Like, we're not going to have a depression. We're printing money. And the people who are responsible for digging holes in the planet, which is to say the extractive commodity industry from copper to oil to iron ore, you name it. Their investors went, hey, listen, hard assets, commodities, we know from the annals of history that commodities protect us against this prodigious printing of money. So about $1 trillion went in on that basis. But, the price of bread is up 40%. The politicians are up the asses of the central bank. So what happens? Well, I said to you, taper tantrum. Taper tantrum happens like, we're overheating, Houston. We got a problem here. We got to take it down. We got to slow it down, right? And so that wasn't good, right? And so that was a misadventure, and that's one of the reasons why bread again has flatlined. Yeah, you go forward, and like I said to you, Yellen hiking in 15, but really doing it like carefully and judiciously, and being terrified of upsetting collateral values, being upset of correcting for the equations which are embedded into the valuation of stocks today. Very, very careful. She's a very prudent kind of. She looks like a school mistress. She's cautious. I respect that. Jake, like I say, Jake came in. He's like, "Get out of here. We're raising rates." Okay, what happened? At that point, there had like investment in shale oil gas exploration. The technological change was making the United States of America the world's largest energy producer. And Jay's rate hikes has a consequence. Like, so the engine of growth, the hiking of rates between, I want to say 2004 and late 2006, early 2007, like it brought down the housing market. Jay's interest rate hikes killed the bright star of economic momentum, which was, you know, energy extraction around about Texas and all that exploration of those deep fracking wells, which is to say, for every $100 you as an investor or you as the credit provider say, hey, this is great, go for it, you know, here's the money, make it happen, bring more on stream. When Jay was done and Jay's misadventure, your $100 of credit was trading at like $30 or 30 cents on the dollar, which is to say, when you look around, all of your peer group got fired. It's amazing that you didn't get fired, right? And so, again, no one's stepping up to the plate. Why are they not stepping up to the plate? Because why would you spend that money when the Fed is going to hike rates and is going to cause asset prices to fall? You're not going to do it. So that's one of the principal reasons why there are two profoundly large, diversified global mining stocks in the world. BHP Billiton, I think they call it Billiton now, and Rio Tinto. If we look at Rio Tinto, it yields 9%, has a dividend yield of 9%, and it's buying back its stock. They have been, it has been enforced upon them that under no circumstances should they mine for new material, okay? That is why commodity prices are going to remain elevated. Is actually a function of the Fed. The Fed's legacy of misadventure is leading to a permanently higher plateau in commodity prices. We're offering a huge profit incentive. No one is accepting it because of these misadventures. And also, of course, because of the nihilism, the anarchy, and I would say the stupidity of, you know, Chris Hohn's kind of group, Extinction Rebellion, you know, the environmental social responsibility is, you know, again, it's making it impossible. All the boards of these groups are now stacked by people saying there's no way we invest, you know, buy back the stock. Prices will remain elevated. So the tragedy today is like the kind of left-leaning, the liberal newspapers, they should be like saying, this is moral outrage. Effectively, you're saying to ordinary Joes, the disenfranchised, those who've not participated in the great asset boom, you're like, guys, like, we're sending you to war, like we're sending you to Gallipoli, like we want to send you into the trenches and we're going to go, hey, attack, and like you're going to jump over the trench and you're going to like boom, boom, like a machine gun's going boom, 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 take you down. We're going to massacre you. Are you in for it? Is your patriotic? What the WTF? Like, and the liberal guardians, the newspapers who are like should be fermenting anger, you know, who fermented the hysteria about Extinction Rebellion and their wacky means of saving the planet by wiping us out, right? Not doing it. I am really cross, really cross.
I was looking through your monthlies. I was looking because, you know, part of this podcast is we obviously look back at Hugh's investment letters down through his rock and roll career as a hedge fund manager. And one that I picked out from June 2008, you were quoting Soros, who was talking about a prediction for that year, and he said the people who make money will be few and far between. And you said, I still believe it will be the feature in this minority camp. In 2008, you did make money. It was proven right. But do you think that statement, for example, could apply now? Do you think someone could say that right now? We're for 14, 15 years down the line, and we could almost have that statement said today, and it'd be accurate.
Absolutely. The few amongst us will make money this year. Because it's all upside down. It's like the Fed propaganda have told you we got your back. We're printing money. No, you're not. You keep taking money away. You're idiots, right? And because of that, extractive industries have not responded to market price signals by supply. So supply's tight, right? And that's kind of hard for people to work out. Hey, Chris, let's do it. Money's too tight to mention.
Money is too tight to mention. Have we not heard the acid capitalist remix? Have people not heard the acid capitalist remix of Money's Too Tight to Mention?
I'm going to play it.
Let me get the lyrics. Let me get the lyrics. I've got the lyrics here. Actually, I've got the lyrics. I've been laid off from work. Have you got the music? Right, here we go. Oh yeah, people. Money's too tight to mention. Get into this, people. The acid capitalist remix of Money's Too Tight to Mention.
What does it say? I went to my banker.
My kids all need brand new shoes, so I went to the bank to see what they could do. They said, Santa looks like bad luck. Got a hold on you, cause Fed gonna go again. Oh Lord, down in the Congress, they should pass a bill a withholding tax on sovereigns holding our teas. From down Capitol Hill, they ain't even interested. Money's too tight to mention.
I can't get an unemployment extension.
But a 3% tax would raise 90 billion.
Stop! I let. Okay, let's get this. Whoa. Let's see if that.
We continue on. There was a bit of acid capitalist remix there. That will be hitting Spotify soon. Hugh, you could go on tour as like a kind of acid capitalist macro DJ. In between, you could because you do a bit of DJing, and then like in between the DJing, you could sort of lay down macro stuff. It's not a bad niche, no?
If you say I look like Mick Hucknall, I'm going to come over there.
No, you don't look like Mick Hucknall, but you know. Is that, to be fair, Mick Hucknall's, I mean, it depends how you judge good looks, but he's done okay with the ladies. I mean, did not go with Helena Christensen, who was like one of the major supermodels. I mean, he's a bit of a heartthrob in some circles, I think, Mick Hucknall. If that's how you define, I don't know if you define good looks, how people do the ladies, but anyway.
No, indeed.
Moving on. So one thing I wanted to talk about in your Twitter.
Hold on a second.
Sorry.
Did the earth move for you, Nancy? Did the earth... So in that tweet, so again, there's a lot of I still believe that you have to provide positive energy to the universe, because whatever you feed the universe, you're going to be rewarded with it's going to get amplified back at you. Okay, so all you haters out there, kisses. So if I was in charge, I would try and tell that story. I would say, like, we just haven't delivered. Unlike 40 years ago, we have a huge amount of debt outstanding, and it's a fragile equilibrium. And the only way we can sustain it is that we have like the stock market and private equity funds, etc. And that's like, so we've created a lot of, I'm going to put it in inverted commas because it would seem it's not being distributed in a justly manner, but wealth. We've created this wealth, and so this wealth underpins this debt, and it's fragile because if this wealth, which is large, which is in property, which is in Bitcoin, which is in gold, which is in equities, but if it were to take a nosedive, and history is littered not by very many episodes, but by episodes when the asset values dive. We're talking about 20% adult unemployment. So I'm like, yes, I'm telling you, I'm a slave to asset prices, and so I dare not disturb the distribution of asset prices. But let me offer something to you. So there are two things I would do, especially this broken record is going to continue to be broken until we change the economic order, right? And so the profound problem that we have today is we call them mercantilist nations. Think of China, think of Germany, think of Japan, think of Singapore, think of Korea. And largely owing to the precedent of the Asian tiger bust. So Chris, many episodes previously, we discussed Thailand, and Thailand's GDP was something absurdly high.
Was that it the fastest growing country in the world at one point in the 90s? Was it the fastest growing economy at one point? I think you said.
Absolutely, yeah. Like for over a decade, and like a double-digit growth rate, like at the rates you saw with China, right? Okay, in the early days, but its growth was being amplified by endogenous growth. They were, building factories, they were building shopping malls. The citizenship was becoming richer. They were spending it, they were upgrading their lifestyle. And as they did so consumption as a contributory factor to economic growth became large. And therein lay its vulnerability, because perhaps they overextended themselves. We're all guilty of it from time to time. And it exposed a vulnerability to the overseas providers of capital, and they yanked their money from those economies, and those economies kind of collapsed. So without the money coming in from Johnny Foreigner, kind of the government picked up the difference, and the central bank funded it, and then you had awful inflation. And then they called in the IMF, and that's like calling in your parents. Like you've really, really screwed up, and you've got to make the call to your parents. It's humbling, and you lose control of your life. And so they all said, I don't want that. So China today, quite rightly, wishes to be robust, durable. It wishes to persist. It's extending itself into the future. It wants to be the largest economy in the world, right? And therefore it has to remove all vulnerabilities. And so the vulnerability is endogenous growth, growth which is dependent on domestic demand. And so they have downplayed that, and they have sought to generate growth overseas. And the mechanism for that is they oversave. And so they create the tsunami of savings, this glut of money, which then goes into the American economy and encourages debt levels to rise as people buy things. And not just as they buy things, because your debt levels and you have dis-saving because you lose your job. And guess what? Like previously you were spending maybe 25% of what you brought in, right? Okay. But then you're bringing in zero. Okay. And so then you take out the discretionary spend, but you're still left spending 15%, right? So you're now dis-saving, right? That is the story of how we went from Volcker at 1.5 times debt to GDP to 4+ times debt to GDP. It's this mercantilism model which is not confident to seek endogenous domestic Chinese growth. So how you circumvent that, how you bring the system back. And I believe actually Keynes, this was a Keynesian proposal when we were devising Bretton Woods, which just never got lift. But you achieve that not by interfering in trade. Trade's this amazing thing. Like it's like we should trade with each other. I mean, we should talk. You call me, send me a fridge. I'm on Amazon, and say hi to the kids. Sorry. But the mechanism for achieving that kind of exogenous over endogenous is these huge nations, they park their surplus savings into the US Treasury market. And by doing so, they prevent their currencies from appreciating. Okay, if their currency, the Chinese renminbi is about $6.50, $6.60 today, right? Were it to be 4, ordinary Chinese citizens would be more well off. I can't speak. Just my head is killing me from the tequila last night. They would be wealthier. Okay, it's not being allowed. Okay, so fine. You want to put $3 trillion into treasuries? No problem. But we're going to charge you a 3% withholding tax. We're going to charge you rent for the fact that you are disabusing our freedom. Okay, so 3% on 3 trillion. I mean, we did the Bitcoin. I'm not going to ask you again.
90 billion. 90 billion. No.
Like what? Yeah, you're on it. How did you know that?
It was in. We just sang it in the Acid Capitalist remix of "Money's Too Tight to Mention." A 3% tax will earn 90 billion. I delivered that line with aplomb. Clearly not enough of aplomb, but anyway.
No, I mean, it's because you look like a hedge fund manager, and then like you just know the answers like so rapidly. And little did I know you were reading Simply Read.
Well, I'm reading the Acid Capitalist's remix of Simply Read. You know what I mean?
Chris, can I ask you something?
Yes, of course.
Just between you and I. Did the earth move for you, Nancy?
There we go.
Anyway, so 90 billion, and that's, remember, that's just the Chinese. Do the same with the Japanese, do the same with the Germans. Like, there's a ton of this stuff, right? The true overseas foreign people write in, tell me the right figure. If the Chinese have got 3, there must be, I want to say, overseas sovereign wealth funds must own about 40% of the treasury market, 40% of about 25 billion. They must be like $10 trillion. So actually, you could be talking about the best part of what? $300 billion a year, right? So then that's real money, right? And so then you create this, we call it a sovereign wealth fund, but America or the United Kingdom or Australia, like all these bastions of social democracy, which, because we have freedom and liberties that they don't have elsewhere, that people have confidence in our contract laws, people want to own our assets. They're like, fine, but you're not free, and you're free riding. So withholding tax, people. With that $300 billion, you create this fund which accumulates and it accumulates and it accumulates. And the next time, because there will be a next time, and looking at today's price action, that next time might be coming to the stock market near you soon, but the Fed will step in. It will say, we got it wrong again, and they will effectively put a floor on equities. And so what a better way to put a floor on equities than like to determine from the tax returns, like who doesn't have assets? It's pretty obvious. Okay, you know what? You've just become enfranchised. You've been disenfranchised by all the lies. Today, I am enfranchising you. And we've got a Federal Reserve and a Bank of England. Actually, it's going to take actions to protect you rather than kind of trying to give you it up the ass. That's powerful. Like, enfranchise the people, or else the people are going to burn the system down. Chris, I interrupted you a million years ago.
No, but that's what I wanted to ask you, because you tweeted about this idea of having the sovereign wealth fund for the people. So you've sort of covered that. But the idea was but then who would look after this sovereign wealth fund? Who would maintain it? Who would sort of be the guardian for it? Because you couldn't have the people in the Fed, the Bank of England, could you? Because would that not then would they not sort of be at cross purposes? Do you not need an independent person or body looking after this money?
Well, I mean, I can hear you. I can hear the audience, and they're shouting, "Bloody yes. BlackRock! Bloody BlackRock! They get everything." Like the BlackRock is the extension of all governments, just like Goldman Sachs. Their buddies. It's like bloody Goldman Sachs, bloody BlackRock. Okay, so whatever we do, right, it cannot be with them. I would devise of an algo, which effectively would be saying, "Hey, listen, we commit to coming in and buying broad risk assets, when the S&P has a 20% correction, and we will prescribe in advance how we will react." And we won't spend all of our money, but we'll start there. And believe me, if it falls 80%, we will still have a mountain of money that we can actually buy, and we will buy in indices. So I would, as much as possible, I actually would not want that in the hands of the private sector, because when you give it to Wall Street, they charge a tax. They charge their own rent, the rent that we were discussing with regard to, hey, I make $4 billion in 2020, in 2022, I'm losing you what am I losing? I'm losing you $4 billion, probably, and for sure he'll be losing more because more money.
I think it's 16 billion. I think it's 16 billion. I think is the losses for the first quarter.
Exactly, because first of all, he only takes 20%. So like it's the clients eat 80%. But for sure, because of his performance in 2020, he'd have had huge inflows the year after. And so again, I try to put it out on Twitter, the dangers of the rule of the investment rule of A to B. It's never A to B. It's never like, it's the journey in between. Okay. So again, I would say to you that for sure, I think for all that equities terrify me and risk assets terrify me right here, right now, the S&P will go back to its previous all-time high. I'm sure of that, because the Feds ultimately will be corralled and forced to do something. Like I say, I wish they would be corralled and forced at that moment that they would actually be spending a withholding tax bounty and actually buying assets which had fallen 20 or fallen 30 or fallen 40%, and they would be creating a fund for the disenfranchised. But they will do that. And in doing that, and they'll talk about how they're creating inflation, and people will flock to buy real assets and prices will go back to the high. But when we return to the high, Chris, America starts to look a little bit like Brazil. But what it means is, in my theory, where I'm not calling it inflation, I'm calling it a specific subsector of prices, which are essentially discretionary items. You have just no choice as a human being. You have got to consume them. You've got to drive your car to go to work. You've got to heat your house. You need energy for cooking, blah, blah, blah. Yeah. Because those prices ain't coming down, I think I've gone ad nauseum on why they're not coming down. What do you do at the all-time high? What does the Fed do? That's hard. And so it's kind of not obvious how we, like to quote Jim Morrison, how we break on through to the other side. It's not obvious. In the 1970s, that manifests itself in a whipsaw market, up, down, up, down, up, down. Whipsaw markets Whipsaw markets are brilliant because they destroy the lie of investing being A to B, because you start at A and you never get to B because you keep getting whipsawed. Right? And clients are just like, you guys are morons.
It's amazing. The acid capitalist is on form, people. He's continued it from last week. He is on form and on fire. Now, one thing I wanted to talk about also, Hugh, was SPACs, special acquisition. No, hold on. Let me rephrase that. What is that again? SPACs. I've done special purpose acquisition company. Correct?
Why not? Yeah. Corporate.
Is that not correct? Company, yeah. Yes. No, I had done my research on this. Now I'm looking. I know I'm dressed like a hedge fund manager, but not talking like one at the moment, because clearly I've dropped the ball on that one. But there was a couple of things I want to talk about, because I was looking into a couple of them, and the one that caught my eye was the one with Grab and Uber. And Uber, apparently, it was the biggest ever SPAC in the world, but they have lost $1.9 billion because they went after this. Southeastern Asian Grab. Uber wanted to expand in Southeast Asia, so it got hold of Grab. It's lost a lot of money. It's blew up in his face. Our old friend Bill Ackman, he's had a bit of a difficult time with his one. His one ended up with the New York Securities and Exchange Commission's telling him you couldn't do that, and there's lawsuits flying around, and basically it's a bit of a disaster. And also Trump, his has went a bit pear-shaped as well, obviously because of Elon Musk maybe getting involved. So they're a bit controversial. What do you make of them?
The Alchemist strikes again. Oh my God, what do I know about SPACs? Oh shit. Did you say that Bill Ackman had a problem? Or did someone go to Bill and say, "Hey, I've got this amazing idea. We do a SPAC. Like we raise a ton of money. But the terms are insane. We have it in perpetuity. You will become rich." Did Bill go, "I don't know"? Or did Bill go, "Too right, I'm in"? I think
the problem is that Bill told a lot of other people that as well, and there's quite a few stories flying about the internet of people putting in significant sums of money, and that money has now disappeared. Because I think the idea was he was going to take over something, but then it turned out he was only going to take a 10% stake in part of the Universal Music Group, and people didn't want to do that, and then he wanted to use the money for something else, and like I say, it all got a bit messy, and there's lawsuits and stuff flying around on the internet, but it's been a disaster basically.
Let's do SPACs. I wish I was involved in SPACs. can I do it justice? You should all know about SPACs. It's an amazing story. Special purpose acquisition. They should be called SPAVs, and they're very spavvy.
Yeah, a vehicle. Yeah, it should be vehicle.
A vehicle. Yeah.
Yes.
So like back in Chris, have you ever heard of the South Sea bubble? What was it called? The South Sea Trading Company. The English company was the biggest company in the world. Does that ring a bell?
Was that not like many years ago? Was this not? We're not getting back like a long time here.
Centuries ago.
That's what I'm thinking about. Yeah, I was trying to rack my brains for something current, but yeah, I know about it from days of yon.
Let me take you back to that era. I'm holding an apple. An invisible. Stay with us, people. An apple. Okay, watch this. Now, I know you can't see it, but I just caught the apple, okay?
Okay.
And thought bubble and reflection, and maybe I've discovered gravity, or maybe, I can wax lyrically, which is to say, I'm Isaac Newton. The South Sea bubble was Isaac Newton. And it is like probably one of the first moments of like social madness, and everyone piled like an asset price bubble. And smart people like Isaac, I think it was Isaac. I could look really dumb if it wasn't Isaac. But towards the end, he sold all of his funds, all of his holdings. He's like, this is nuts. This is crazy, right? You people are bonkers. Guess what? He sold too early. And the crazy people are like, don't know what you're talking about, dude. Stick to your apples, okay? And the South Sea thing went boom, 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 boom. And guess what happened? Isaac, fresh from dropping an apple. Where did my apple go? Let me put the apple down. Isaac, he bought it back and he nailed the top. I mean, he nailed the top. He lost everything. He's like, the madness of markets. Yeah. So, but back then, so in this manic time, company, I used to you'd read about this in the Charles Kinderberger Manias, Panics, Crisis, whatever. It's if you're looking for recommendations for macro trading and stuff, it is. If you haven't read it, you don't get in the door. Ever since that Asian tiger crisis, it has been catastrophically bad at explaining the world. But up until 1999, it was bomb. It was dope. It was incredible. Anyway, and I would sit as a grown man with the duvet over me with a torch, reading this stuff, like just couldn't believe the insanity.
Why didn't you just put the light on? Like, if you were a grown man, why were you under the duvet? Why didn't you just put the light on? Or, was there a charm in being under the duvet?
Because I am a considerate lover.
Oh, right. You're married at the time. I didn't realize you were married, right? I thought this was a single man. Okay, I see.
Chris, like, I've been married since the age of 10, I think.
Okay. That explains it. Okay.
Well, I was forced into a child marriage. Please don't tell her that. So yeah, like, she's trying to sleep, and I'm like wading deep in the South Sea China bubble. Okay, South Sea China bubble. Yeah, South Sea China. And they would we're talking about SPACs or SPAVs in case anyone has dialed off. They would issue stocks, and you get the prospectus, right? And prospectuses today run to thousands of pages. It's all risk warnings, right? And it's a description of the business and what have you. It's like your DDQ for the hedge fund manager. And this was a one-pager. And it would say, the purpose of the money that we're raising is, and the line where you fill it out, it's like, it's a secret. I am not making that up. I may be exaggerating a tiny bit, but I'm not making that up. And so, I mean, it's the red rope outside the party, the nightclub. It triggers dopamine. You're like, What do you mean it's a secret? Because like secrets to me, secrets are always like, they're always like really good things, like really good things. I'm like, mum's the word, can't tell you. And it's like, remarkably, everyone would be like, I'm in. Load me on the secret. And of course, that was catastrophically bad for your wealth. Okay. And so you read Kindleberg and you think, I could never, ever happen again. Okay. So fast forward into the advancement of man, where we've got computing power, which is mind-boggling, quantum computing power, where we're as smart as anything. And we have SPACs, which are basically, it's a secret. It's a secret fund, right? So what happens is you need a sponsor. You need a name. Like Bill's perfect. People love Bill. May I remind you, he smells of pine cones. His hair is immaculate. His shoes are brilliantly shiny. He wears a pencil thin tie. He has no fat. He takes care of himself.
A hairless body. Hairless body.
A hairless body. I wish that he could marry my daughter. Bill, will you sponsor The Secret? And Bill goes, yeah, what's in it for me? Because I'm on Wall Street and we charge rent for our services. Heads we win, tails we win. You lose. So for getting a name on board, the promise is you get 20% ownership. Like, so you raise 10 billion, right? The only money you have to put in, the only money Bill or any other sponsor puts in, and it's not, it's a deal, but it's still money, it's still, money's too tight to mention. You have to pay for the setup costs, the legal, that's considerable in our. But you raise 10 billion and you get 2 billion of value transferred to you because of your sponsorship, right? So Bill's like, 2 billion, I'm in. So Bill goes to the market. Hey, boom, boom, boom. I got a secret. I'm Bill Ackman. And you've got 2 years to fess up. You've got 2 years to come back to the market with your idea. Now, it's actually really, really cool, right? Because and the metric is it's a share, right? And there's an IPO. I'm raising $10 billion. That's denominated in shares, and each share is $10, right? And the promise is, if I can't find anything in 2 years, I give you the money back. Like whatever money you give me today, it's going into a custodial account. I can't touch it. It's your money. And it's better than that, Chris, because when I come to you and I was like, hey, do you want to know the secret? And you're like, yeah. I've been waiting here for the last 6 months. What is it? What's the big reveal? If you don't like it, so Bill went, I've discovered music. Let me tell you, digital music. We've got Spotify. We've got Apple Music. It's the future. And there's this big company in Europe called Universal Music. I don't know if you've ever heard of it. And people are like, yeah. Bill, are you okay? You okay, Bill? He's like, oh my God, this is amazing. And you're like, okay, but yeah. Shut up, Bill. What's the secret? What's the big reveal? It's like, no, that's it. People are like, Bill, have you lost your marbles? You told me, or you intimated that you had found a cure for cancer. You had found something which was going to radically change all of our lives. And you come back to me with Universal Music. WTF, Bill. Indeed, Bill, F off. Okay, but that's fine. Because you get your $10 back. Okay, but I think, I don't know this, but from what my intimation from what you were saying is, even the SEC, the regulator is like, normally, they kind of went, whoa, what has Bill done now? And they're like, Come on, you just can't do a SPAC and then buy like an equity stake in a listed company. You know, have some decency. And they're like, no, this whole thing's off. This, go away. Go away. Anyway, so that deal didn't happen for a number of reasons. But this is where it's profoundly amazing, right? So let's take the humor of Bill out of the equation. You've got a secret. So let's do Grab is really good. And we're going to put the price of Grab up now. I'll explain Grab being the SPAC that you discussed.
Now, it's essentially Uber in Southeast Asia. I think it's basically the best way of describing it for anybody who doesn't know what we're talking about. And
the sponsor for Grab was Mr.
Well, it was Mr. Brad Gerstner of Altimeter Growth Corporation.
Yeah. So again, he's a legitimate name. I mean, they're all legitimate names. You know, they're all suits, but you know, he's been a moneymaker. And unlike Bill discovering music, actually the opportunity with an American fund to sit there and to take a big was he taking an equity slice, or he was taking the whole of the company?
Well, I think Uber was taking a part of the company. They were joining in, and they were taking a part of it, as far as I'm aware.
Okay, so that was kind of legitimate, and that was one of I want to say that's one of the rare SPACs where everyone with their $10 shares went, yeah, I'm in. Like, you know, it's like with 2-day settlement, you've got 2 days to commit. You know, they give you a termination date, commit or not commit. Okay, kind of thing. And so, yeah, I'm in. And then with the money raised, right? So the money's raised because the money's taken out of the custodian account, and suddenly you're the owner of Grab. And remember, we're still back in the day of COVID lockdown, and Netflix, Peloton, you know, home delivery, food home delivery stocks are zooming. Zoom is zooming, right? And so it goes from 10. Can I create beeps? I want to say it goes to 36, right? Kind of like that. That's a SPAC kind of working, but you know, what was the flaw? It was zooming during lockdown, and what's happened? Like, let's talk about the suicide fund again, the lost covenant of the Ark. What's happened since? It's fallen 75%, right? And so Grab trades at 3. All SPACs, it would seem, are destined to trade at 3. Trump. I mean, he's the greatest damn personal sponsor ever. Hey, I'm a rich guy. I'm, you know, whatever, you know. So they raised, they've got this 2-year, you know, some guys have raised money. It's a secret. So you raise it and you're like, oh, what are we going to do? like, you know, anyone get any ideas? And so someone goes, actually, my niece is dating this guy, and his cousin, with his cousin's uncle, he works for Trump. Why don't we ask Trump, right? And we'll ask Trump to launch like a kind of right wing Twitter, and Trump will be the face of it. People are like, give that boy a cigar. Holy Mary, what do you say about Judy and Spank Me?
Slap my ass and call me Judy.
Slap my ass and call me Judy. Hold on a second. Donald, have I got the idea for you? I'm going to give you 20% in perpetuity on, let's call it again, 10 billion. Are you in? He's like, you bet I'm in.
The Trump Media and Technology Group was their official title.
Yeah. So, and I don't think this is closed yet. I may be wrong, but I don't think it's closed yet. I think so. It's still to be, the money I think is still sitting in the custodian account. I would say, hurry up, boys. So Trump comes in and hits the tapes. Yeah, we're going to take down Twitter. We're the future. You know, my tribe. You know, we are. You know, blah blah blah, propaganda. And the share price. You know, the share price I think goes 10. It would have been trading 9 technically it would have been trading like 9, probably 85 or some $9.85, and it goes to a high of what?
Well, I read it went up 550%.
Yeah, 550%.
550% in a week after he announced it. That's how much it went up.
Well, I'm looking at my chart. I mentioned Grab. Grab peaked. They grabbed the money with a valuation that was too rich, and then investors were smoking herbs, and they bid it up to $13.50. Because remember, this is a system where 10 is the median. It's the go-to. Typically, it's hard to escape 10. It's easy to collapse below 10. And it went from 10 to 13.5. And today it trades at 2.87. I trades at $3. That's Grab. So the Trump one, I'm going to put it in my computer thing. What did we call it? I think it's DWAC. Is that correct? DW. Yeah, Digital World Acquisition Corp. Okay, so
yeah, DWAC. Yeah, that's right. Yeah.
Yeah. The world is this show exists because you think I'm a Looney Tune, right? You people, you have no idea. Everyone is blinking mad. Okay, so Digital World Acquisition, with the advent of a 78-year-old who does not have a good health regime or a good diet, who is overweight, right? Who will die. And I don't begrudge him his life. I hope his life is long and plentiful, and I hope he does better for mankind and he rejects his body put down. But come on, we had 8 years of Twitter as a listed stock, and they made zero, right? And this guy is the future. This is a long way of saying DWAC went from $10, and I think they did raise, looking at the chart, they must have raised the money. It went from $10 to 180. Right?
What's that? So it's like
this is GameStop. This is Mem. This is Mem stocks. Mem. Is that how you pronounce that? Reddit. Reddit. Groups getting behind it. Liquidity in these things is always kind of patchy. Like you say, Elon came in and it's now, again,
the Apple.
Boom. There's something up there. Gravity. Hold on a second. Boom. Okay. So it's gone from 180 to 45. Okay. Destined to trade for $1, $2, $3, $3. Wacky world. Now, the other thing, which is so another thing, and this is boring, maybe I'll cut it, but again, so the sponsor, Wall Street always wins, okay? Secondly, what happens is there's an amazing stat arbitrage opportunity because you raise money and it's a secret for potentially for 2 years. And initially, there's newspaper headlines, there's a picture, there's endorsement, there's the mania, and you're like, I'm in, film me, right? And then it's 3 months later, and there's another amazing secret thing, and you get bored of this one, which is to say, it trades below 10. Now, you will be able to redeem this thing at 10 within 2 years. You don't know when, but the only certainty is this piece of paper must exit at 10. But you get bored, or you get margin call elsewhere, which is to say people sell it. Not many people, because it's kind of a dumb thing to sell 10 for $9.80. Why would you do that? Why would you give 20 cents away? But your mind's a bit like, you're a monkey mind. So the stat arb guys, they come in and they buy $9.80, and they buy as much as they can. If you're selling, these guys are buying, right? and they hold it, and then it goes to you've got to submit your stock, you've got to tender your stock into the approval of the deal, and they're like, sure. Did they say sure? Does it matter? No, I don't think it matters if you say yes or no. I'd like to think they go, no, this is dumb, but it doesn't matter. But that's your exit. So you do say no. Sorry, you say no. You have to say no, because in saying no, they send you your $10 back. If you don't say no, you take on the stock ownership and the stock.
So you make an easy profit there, basically, by saying no.
By saying no, but you make a tiny profit, Chris. Yeah, you make 20 cents.
Yeah, but if you've got enough of it, it can add up, no?
If you indeed, and if you got enough of it, and there are literally thousands of secrets, and the funds just. I've got a buddy who does this. Like this week, he made. He doesn't do that. So you've got 2 days between tendering and saying, nah, I want my money back. Boom, and the deal going through. And I had a coffee with him. We cannot explain. And if someone has the answer, give me a call, send me an email, do a Twitter. We cannot understand, but there is persistent occurrence of the price pukes. The price will fall like up to 10%. And it does so, it always does it. I mean, I can't say 9.5 times out of 10, the stock price pukes. So my buddy, he's on and you've got the dates. It's all certain. They're all lined up like ducks. You can do this, people. You phone your broker and like, okay, SPAC stock 42 is tendered this Monday coming. 2-day settlement takes us to Wednesday. Okay. I wish you to find me stock, and because I want to short, I want borrow on stock, and I am going to short it with the near certainty that in the next 2 days it's going to fall 5 or 10%, and I'm going to buy it, and then it'll go back to 10. And he says he makes on average like $30,000 to $50,000 on every deal. It's like he's just like, I wish I could get 3 million, but it's for my PA account, and it pays the rent. Welcome to St. Bart's, people. Now the final part of that story. I mean, isn't that an amazing story? Isn't it just, there's so many things going on, but every time you turn and look, and you're like, Wall Street makes money. Ding, 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 ding. Who loses money? You idiot. And your secret. So the last one is, so where again, it's either amazing or it's just the complete corruption of civilization. Good or bad, you get the money. You get the money because the money gets underwritten. And maybe I'm misusing the term sponsor. Like you've got the celeb person that endorses it, but you'll have a sponsoring, typically a private equity group, and they come in, they're like, we guarantee you the money, but you've got to give us tons of stock options. And every clip down in the share price, you got to award us more and more and more. And basically what they do is they give you the money and they hedge all of the risk out, right? And then if it collapses or if it's like, the Trump thing, they'll also have warrants. They're covered both ways. And so if there's a big spike either side of it, they'll make money. So they guarantee you the money, and they're guaranteed not to lose money. And if anything kind of hot to trot happens, they will make a lot of money via the warrants and their shorts that they have. Welcome to Wall Street. But the
house always wins, huh? The house always wins.
House.
Oh, people, it's enlightening but depressing, huh? We are swimming against the tide, but we are here. The asset capitalist is here to push you against that tide and raise you up like a salmon so you can battle against the tides of corrupt, malignant economic forces. Is that fair to say, Hugh?
Yeah, I mean, red pills, blue pills, wake up, people. Wake up. I think, hey, listen, there's a revolution coming, and the Alchemist and I are leading it. Okay. I'm many things, right? But I've been engaged in the world of finance for a long time. I don't read money magazines. God forbid I would stop to peruse the money or the financial section in a newspaper. They're lame. It's dull. It's boring. And yet the zeitgeist of our time, money's too tight to mention. It's four times bigger than the universe that we look at. It's everywhere. And people are beginning to kind of go, I need to know more. Okay. And so we're on a mission to make it interesting. We're on a mission first and foremost to tell the truth, right? And try and tell the truth with humor and try and tell the truth kind of without prejudice. But our motivation is like, wake up, people. But why are they asleep? Because when they do go with their curiosity, they just meet lame guys in suits. I got criticized for wearing, you know what? I'm taking it off, Chris. I'm taking it off.
I'm the lame guy in the suit.
Burn the tie, Chris. I am there you go. Shirtless and damn same
there
parts.
We go. It's gone.
Jacket's
coming off. Jacket's coming off.
If you're at home, people, take it off. Come on. Make the pledge.
I was going to rip the buttons off, but I'm not that reckless. Right, there we go. It's off. I've joined the club. Everybody, get involved. Freedom. We're out of here.
We're done. Chris, have you got anything to take us into the ending?
Well, I was just going to say, we talked about Simple Red Deal, we talked about Nick Hucknall. I'd just like to leave with a little bit. Listen, boy, I tell you a thing. I make you a career in the business I'm in. I'll make you rich. I'll make you a toy. I'll make you turn over into my little boy. I know money's a thing. You're only inspiration and your only meaning. You must think all I do is spend my time making pretty pictures of you. You can fall when I will climb. And I think that's the story of today. You will fall and they will climb, people.
You fall, they will climb. Tails I win, heads I win. You lose.
Good night, people.
Done.
Good night.